Okay, hi there, guys. Andrew, Bobby, how are you, mate? Gino, just let me know if you can hear me. You should be able to now. I just had it on mute. So normally within the first minute or so, I just load up, uh, start streaming, play around for a minute while everyone comes on, and then start jabbering on. All good, fantastic. All right, let's get up and running. Welcome. What was it? The morning. What would we call this? The morning overview of what the markets did overnight. Um, so they were strong, strong overnight, which is a bit of a what did I call it this morning? The merry-go-round continues on the overnight markets, and our market is just whipsaw. So it's quite interesting actually, and it's funny how the markets were buoyed. Was it Hong Kong? So was it they pulled the pin on what was it, the extradition bill or whatever they call it? So that buoyed the market. The thing is, it was quite a while ago when the market was a slightly negative. It was in a negative mood or negative bias. When they were talking about Hong Kong, bang, the market got sold off. Then, things got out of hand over there. Market didn't care. They stopped focusing on it. And now that they've come to some sort of resolution, bang, we started to focus on it again. So it just depends what sort of mood they're in, um, or whether the markets are starting to get buoyed a bit and they weren't prepared to go down, but it's a good excuse to go up. So that was quite interesting. Another interesting thing that I saw overnight, obviously you would have seen it too, gold was supported. I mean, you could argue that was the drop in the US dollar, but if the markets, I mean, that really has been going up even with the US dollar going up. So it's been going into the face of the US dollar pressure. Don't forget gold is a currency pair as well. Um, Gold in terms of US, so if the US dollar goes up, technically that should pressure gold down, but it's been going up because of all the global risks and so on and so forth, safe haven buying and so on. Um, if they're out of the woods in the market because of bounce backs last night, there's a risk on tone again, and everyone's getting a bit more positive. You would have expected gold to get, especially after what, a 20 something buck rally the night before. So that was I found that interesting. I don't see there's a lot of well, there's no safe haven selling. If there was a bit, it was getting soaked up quite a bit. So it could have been, the US dollar is an excuse to give it another nudge through resistance, which we'll take a look at in a second. Um, or, people with safe haven buyers are just not convinced yet. You're not willing to give up, and don't forget, if you've been buying it up for a while and you're loaded into gold stocks, Aussie gold stocks, you've got a lot of fat in your trade too, where you can give it some more room to move. If and be proven wrong. If this market starts to get buoyed, the indices start to get buoyed. The S&P is right up in that's a broader market in the US. That's right up near resistance at the moment, which it hasn't broken through, unlike the Dow did pop through and straight back down again. So they're sort of at that juncture where it's easy for them to go get sold off tonight, get smashed tonight. And don't forget, we got US payrolls are out tomorrow night at 10:30, well, 10:30 our time, any Sydney time. At night, so they could be just sort of floundering around till there. I don't know if anyone knows about the beige book. I don't know a lot about it, but I think it's important, relatively important. They were pretty much said the same sort of thing, that there is modest growth in the economy. It's not really slowing. Um, there is modest growth, although tariffs are concerned. They're definitely a concern at the moment. They're sort of knocking on, like we were discussing yesterday, manufacturing. Inventories are up, so that's cutting back on manufacturing, hurting manufacturing because the inventories are there. People are paying the same amount rather than just buying more quantity. Why would you buy more quantity at higher prices? You're going to have a dollar limit on your spending. So all that sort of thing. Tariffs are still pressuring the market. They're still getting that modest growth. Potentially, with the numbers last night, I think the US dollar adjusted because it's been biased up. Everyone's sort of looking at the US dollar being biased up because expecting those rate cuts and the fear in the market and the global recession, all these sorts of things, the inverted yield curve, bond yield curve, pressure on the upside because of rates, potential cutting rates. Now, I think it adjusted last night because it's just showing that the economy is still growing at a modest rate. Nothing's really changed the last few months, and that's continuing. So they're sort of looking at that and go, okay, probably they do expect a rate cut the next meeting, sometime the end of the month, I think. But maybe the expectation for another two rate cuts after that is is a bit of a long shot. So I think the US dollar long bets are getting squeezed out, or they're cutting the long bets into the market, which means selling obviously, and a bit of a fall back to earth, I guess, on the US dollar, which we saw last night. That and risk on tone into equities and risk off into safe havens, I guess. So yeah, that was an interesting kind of a night. We've got the spies just open, so let's just put that up. I'm guessing you can all hear me clear. I just accidentally hit the volume button. Spy, what we're saying this morning, I must have deleted it. We expect it, it's up stretched at the moment, but when you come so close to a resistance zone, you really should be expecting, especially when the market's up. If the market's up and the overnight market fell just below a resistance zone, you expect a washout. You expect a chip through. So I still expect us to push through, maybe the next before 10 o'clock even, or just after 10 o'clock to really jam through 65, 67. And then potentially we'll have to see how it goes. I mean, it could just keep going. We don't know, but it is a stretched market at the moment. And the likelihood is that it's going to trigger some stops. And then if it's buoyant, if it's a bullish market, maybe pull back, build a higher low and continue this trend up towards 65.95, which would probably, I think that coincides with about 6,000 on the equity market, the ASX. So we'll just see how that plays out. It's a bit more positive. So the market, we're expecting the ASX to open up 20, which would take it somewhere around 75, thereabout towards 80 potentially. If the SPY holds up a bit more, it could be easily another 5 to 10 points. So it could be 20, 25, potentially 30 points up on the open, as you're going to get that follow on from that. You can see this market press down, grind its way back up for the remaining of the day yesterday after a big sell off. So we're expecting down somewhere around 40 points. I think yesterday it was down a lot harder, but it bounced back and it ended up down 26, say mid 20s, 27 points yesterday. So it actually bounced back quite strong, and it gapped up on the 10, 4 past 10 close. If you saw it at 4 o'clock, it matched off, 10 minutes later, another roughly 10 points higher. So it's quite a solid close as well, and that was a couple of days in a row. Looks like there's buying onto the close in the match anyway. So it looks positive. It's probably going to be more positive. I don't like the grindy action. This is on the 30-minute chart, but no reason why it can't open up, get support, and then just see how it goes. Whether we get a bit of selling coming into the close today, it's that whipsaw effect. Don't forget, a couple of days up, sell into the close, because we do have, come into Friday. We're not sure what's going to happen tonight. It could be relatively quiet because they're looking towards jobs, payrolls. Now, if they come in a lot less than they expect, that's going to throw it, because that's what the Fed looks at, is the jobs market, the labour market. It might say if there's less jobs than expected, there's less growth, that's going to flow on. So it's a big number out tomorrow night. We get a bit of a heads up tonight, I think at 10:15. Some employment data out tonight, but it's not the big one. It's not the all-encompassing. Was it the first Friday of every month the US has their numbers out? So yeah, we'll see how that goes. So the market's open in another 5 minutes. We'll just see if we can quickly have a look at the overnight markets and where they stand. This is gold. Like I said, gold buoyant. It could just be a flush out of that high. So just be wary if you're completely bullish in the gold, and it has backed off since it pushed through those highs. Could be a flush. That structure still looks really good, and we've spoken about that. Supported at 14.92, popped up, pulled back, held a higher low. Couldn't get through that time. So generally, when you can't get through the highs and you can't continue on for whatever reason, you get this. Obviously the people who bought it here, the ones that are going to be most under fire, and they're the first ones to sell off or get stopped out. And there's a bit of a squeeze, and it has to have it like we said many times. If you're doing a high jump and you can't get over the first time, you probably take a longer run up, or long jump, you end up taking a longer run up. Same sort of thing. When you go a bit of a pullback, you need a deeper pullback, build your base to fire up through, and see if you can get through the highs, which it did. Popped up, pulled back. Highs were, that breakout around that 1534 was retested, and then you got to push up through the highs. Now, we want to see if this can continue. That would play into a pullback tonight. If the market does get knocked around in the US and European session tonight, a bit of profit taken after a couple of solid days, gold would probably spike higher into new highs. But again, we'll just have to see. It's not yet. I'm not convinced this is a break to new highs, and a lot of people will be. Good structure, but we could easily fall back here, pop back up, lower high, and then come back down and give the gold bulls a bit of a creaming. Wall Street, this is the Dow. Don't forget it's just a CFD, but basically around the index there, that's holding. It's that 26.4. Whether we're not, I don't mind that it's come off the high of this high low at 25,990. There's still some headwinds, and it is extended. You can see. So the buyers gave it a good nudge, pushed it extended, but again, it's getting capped around that 26.4. Whether it can extend up to 26 and test that 550 mark, don't know. That would mean you would expect that the S&P, the broader market, which is this one here, has got through that 29.40 and really cleaned out some of these stops above. If not, and it rolls over from here, I mean, it's primed. It could easily, you can see that it's stretched into there. The bulls are giving it a good nudge. We've had this high-low form. You would expect there'd probably be quite a few, bit of bullish sentiment out there, but there's still that underlying, growth concerns and all these sorts of stuff that could easily knock it down. So we're at that time. I mean, this market, if it can roll over, if it does roll over, I expect it's going to be a lot of bulls lined up from here, needing to get squeezed out of the market. So there is, we're sort of in that zone at the moment where it is an each way bet. We've had a couple of good trades go off yesterday and we're up on both. And funny enough, with gold rally, I thought if the market rallied tonight, gold's going to back off. It hasn't. So our gold stock still looking okay. It looks really nice. And the other one, which is a long exposure, is looking good. And we're probably getting another one tick off today if we'll just keep an eye on it. It could trade on the open. So look, we'll see. DAX, same sort of thing. Yeah, that's edging higher. It's obviously got some headwinds as well, but that's not looking too bad. They had Italian concerns with their government, but they formed a coalition government which could settle things over there and start support Italy or the concerns there. So it's concerns for the EU. They have to pump out some money to support them, but it looks like, and Germany being a big part of the EU, it's probably going to help them. And also, I don't know whether it's going to be a hindrance. There's the EU the euro rallied overnight because of the stimulus is not going to be as great as what they expect. So that's, the euro has potentially found some buying because people are just closing out on shorts. Whether that's going to be good or not for the index, but then again, if you don't stimulate the zone as much, it's mean there's not as much problems. But the problem is the markets. It's like they're addicted to stimulus at the moment because the market gets stimulus, they go up. Get stimulus, they go up. They don't get it, they don't go up. So it'll be interesting to see how the DAX and the FTSE go. That's the FTSE there, still up at that zone. We've got it 73.06. It has broken through, busted through, but it's come straight back down again. So if that starts to get heavy, that's not a good sign. That's a big washout, and you would expect that 72.40 to get attacked and potentially break below that. So that's it. We'll just see. Let's get back to. I just want to take a look at the overall market. There's something I want to show you. It's mainly on the indices. That's it there. All right. So this is the daily on the S&P. Is it? Yeah, so this is a daily. You can see that there is pretty much, it could easily be an ideal spot. Touched it, we backed off, got smashed there, all the way back up, retested, pull back, high, low, straight through, straight down, and we've gone bang, bang, bang 3 times. And that's on a daily chart at that 29.50. That's the big S&P. So that structure there, although it's starting to look like it could curve, for me, I'm not convinced yet. And we're sort of over that overextended mark to the upside. So buyers are giving it a good nudge, potentially going to roll over from there as well. I mean, that's just what's happened previously. You can see back in 22nd of August, and it was around earlier when it was same sort of setup, a bit overextended on the upside from buying pressure. On the 13th of August, we backed off there, and they backed off, say, from 50 down to 30, 20 big points, which is, what we made last night, really. I know, actually, I lie. What's that? I'm talking 120 big points. That's a massive move. So there is potential for this just to go boom down. So just be careful. Same with the Dow. The Dow's at that zone too, even though things are looking a bit rosy. We've got that washout. It has, you can see this uptrend here off the high low. It seems to be indecisive. It doesn't know whether it wants to believe the bullish case or the bearish case at the moment. So, but still, it has broken that uptrend. We're consolidating below this overall, highs after breaking it out. So this could be a major washout if you're looking at longer term weeklies or monthlies, and we could be going down, or it's just consolidating. We're going to bang back up again. I mean, at the moment, we're sort of caught at that, you don't know whether to flip over to be completely bullish or stay tentative. So it's at that stage, and on sort of all markets, if this market starts to break higher, you want to get a bit more long exposure into portfolios. But at the moment, I'm quite happy if we got 3 or 4. I think there's some good quality ones, some good setups. They've already been sold off, so we've looked at ones that have had that correction and starting to lift from already correcting quite a bit. So if the market does have a bit of a tear lower, we could be supported with the fact that it's actually already sold off. So we'll keep an eye on those. Yeah, so this is the Nasdaq, is it? Nasdaq, which is the same sort of situation. So there you go, guys. We'll see. Market's is opening now. We're up 1.1 of a point. Nothing flash, but it's only just opened. Let's go back to the SPY. So plan of attack today. The 30 minutes up, it is into resistance, and it has reacted off that resistance at 65, 60, 67. So really, if this pressure's easing, you want to see some sort of pullback. I mean, the 5 minute I don't see as primed to buy or sell. It could be banging off this support, but you want to see that flush. It's got to get through its action the first 15 to 20 minutes. So, 10:15, 20 past 10, the market chops around and then starts to find some sort of direction. It could easily pop up, dragging some bulls on here, squeezing back out with a deeper correction and come falling back through the MAs on the 5 minute at least. So they do. We all know the open on the SPY at 9:50 is chop. It just will whip you around. So just keep an eye on that if you're trading the ASX. Sorry if you're trading the SPY. All right, let's keep an eye on it. See how you go. Any questions, guys? Shoot us through an email to support@tradesetup.com.au, and we'll move on with it. Good luck today, and so we've got one more tomorrow, then the end of the week. So just remembering the numbers are out. The big numbers are out on Friday. So if you get too heavy on the long side, be careful. But if you've got absolutely nothing, I'd suggest be careful as well. Couple having a bit of exposure to the long side. So if you're wrong and it does kick, if I'm wrong, I'm a bit bearish at the moment, but I'm happy to be wrong and get some setups. And that's what we've done at the moment. Even though I feel bearish, more inclined to, or biased down, I guess, you can't forget about the fact that there is some stocks still heading up and they're setting up. So if it sets up, you don't want to trade what you believe, you want to trade what you see. And if you're trading what you see, you're buying the stuff that's, if it's set up, you've got to give it the benefit of the doubt and play it. If it doesn't, you know where your risk is. So that's about it, guys. And on Monday, what we're going to do on the Monday stream, so at 12:30, we've been working on more of a systematic approach to trading the markets with a couple of different indicators and a different style. I mean, most people know our style, but we're working on a couple of things that I might just run through with you and see what your thoughts are on Monday. It's good for intraday, but we're sort of working towards the sort of style. If you change it around a bit, you should be able to trade it on most things. Using the same sort of style and the same sort of theory. But I'll talk the basics of that on Monday. Anyway, guys, enjoy today. We'll speak to you again soon. Cheers, bye.